coming to you on the network service of Radio Nigeria across the length and breadth of the nation. This is Business Hour, hosted by Martin Udogie.
Good afternoon, listeners. You are welcome to today's edition of Business Hour. Business Hour with Martin Udogie is on the network service of Radio Nigeria. It is broadcast simultaneously in every state and the Federal Capital Territory. You can also listen to the program live online at radionigeriaonline.com. I am Martin Udogie, your host, and our sponsor is EcoBank Nigeria, the Pan-African Bank. We have a great interview coming right up on our special guest interview segment. Our special guest today is the Director General of SEC or SEC, the Securities and Exchange Commission, Arunma Oteh. It takes a great guest to have a great interview, and in this interview, the DG was simply fantastic. Welcome back to the special interview segment of Business Hour, and on this very segment I have a very special guest, a distinguished guest. My guest today is the Director General of the Securities and Exchange Commission, who is also a board member of IOSCO. IOSCO is the International Organization of Securities Commission, and by virtue of that she is the chair of the African Middle East Committee segment of that body. And my guest is Arunma Oteh, DG SEC. You are welcome to Business Hour with Martin Udogie.
Thank you. I'm delighted to be here.
Thank you, madam. I want to start this interview on a broad level. Okay, I want to start by asking the role, what you consider the role of the capital market, because when you look at the economy, people talk about oil. There's a lot of discussion about agriculture, about telecoms, but I think the capital market is also strategic, to this whole economic transformation. So for the benefit of all Nigerians, because this program is nationwide, from your vantage position as the SEC DG, tell Nigerians why SEC is so strategic or critical to this whole, or the capital market generally, to the whole economic transformation effort.
I think it's an important place to start. The reason is that capital markets enable businesses or governments to raise medium to long-term funds.
Okay.
And you mentioned agriculture, you mentioned infrastructure, you mentioned other sectors of the economy. There is no way we can realize our potential in any of these sectors without having medium to long-term finance be available to the sectors. But beyond finance, one of the things that capital markets provides, which is a vehicle for you to raise money and a vehicle for you to invest money, is an opportunity for meritocracy, for the highest levels of corporate governance, for accountability and transparency, because the process of raising money means that third parties need to be involved in raising money from the capital market. Means that third parties must be involved in that process of evaluating whether you're right for investors to invest in. And we as an apex regulator, which is the highest body responsible for ensuring that things are done properly in the capital markets, oversee what happens with issuers, oversees what happens with investors. And for a country of hardworking people, of enterprising people, people who have entrepreneurial zeal, it is important that beyond the banking sector, beyond the short-term funds that you can get from banks, that we create an opportunity for Nigerians to build businesses through providing medium to long-term finance, whether it is through equities, which is an opportunity for you to have a beneficial interest in a company, whether it is through bonds, which is an opportunity for you to lend money to a company or to a state government or to the federal government. It is important that we have medium to long-term finance, and no economy has been transformed or has developed without medium to long-term finance.
Okay, DG, thank you. This brings me to my next question, which is basically the issue about capital market, the bond market, and all that. When people talk about the capital market, the focus just goes to the equities market. In fact, we had a gentleman who visited Nigeria recently. He's a Chinese national. His name is Mr. Jin Donghua. He gave I think he's an executive of IFC, International Finance Corporation.
He's the vice president and the group treasurer.
Yes, he gave an interview to the Guardian, and he commended our equities market, but he said something which I thought was profound. He said that our corporate bond markets is not developed, in the sense that it's not as large compared to our GDP. And he cited some examples. He said if you look at the corporate bond market in a place like South Korea, it is 65% of GDP. If you look at South Africa, it's 20%. China is 20%. And he said that ours is negligible. It's, less than 2%, about 2%. So, but that the private sector needs such a market, corporate bond market, for credit to drive economic growth. Do you agree with him?
Absolutely. But I guess people may say that I agree with him because we were previously colleagues at the African Development Bank.
Okay.
But most people who are familiar with capital markets will know that most bond markets, particularly corporate bond markets, are usually larger than the market for equities. The reason is because it's a market that provides funding for companies that are listed and for companies that are not listed. It's an opportunity for investors, whether retail or institutional investors, to take a piece of debt to lend money to a company.
So an unlisted company can raise money from the capital market?
Absolutely, through bonds.
Through bond, yes.
While the process
yes.
of raising money through equities
yes.
means that you would generally list on the Nigerian Stock Exchange.
And then you give a part of the ownership of that
part
company.
of your ownership, yes, to the investor.
Yes.
So there may be companies that may not be ready
exactly
to give a part of their ownership to an investor. The opportunity for them to raise money is still there through issuing bonds. So it's very similar to going to a bank to borrow money. But in this case, investors, pension funds, insurance companies, promoters of collective investment schemes, retail investors get a piece of debt that you have issued as a corporate. So the opportunity is enormous in that respect.
Since we are still on the subject of bond, I want to talk about government bond.
One of the things I think you made the comment around, how come our market isn't as large
as these other countries that he cited,
and what are the things that SEC is
doing to do
it? Is true that the potential of our own market is still very, very high. What are the things that the SEC is doing? We have reduced the average time with which you need to file your applications. We've reduced the cost of issuance. We've made it more efficient through a number of measures. There is something that is called a shelf registration or a shelf program, which basically means that if you're a company that wants to borrow, you can establish a program and you can have many transactions that you do off of that program. And anytime you want to do a new transaction, you basically issue a supplement, which is just provide additional information on the back of the broader documentation. It's called a shelf program or a shelf registration.
What's the advantage of that?
The advantage is that it reduces your cost of filing because you don't have to go through the same
process all over again
that you have to go through initially. And usually you have a period of 2 years within which you can use that program. There are a number of other things we've done. We have introduced book building into our markets. In the past, you basically had only underwritten bonds, which meant that the issuing house had to take responsibility for the bond issuance. What we've provided is an opportunity for them to leverage the fact that you have pension funds, you have insurance companies, you have other investors who may be interested in these bonds and originally determine whether they would like to invest in that particular bond. So what we've done is create an opportunity for underwritten bonds, for book building, which means that there's greater liquidity, there's greater participation by these kinds of investors in our market. So the potential is enormous. We're starting from a low base, but the potential is enormous. There are also things that the federal government has done. The president in 2010 gave a waiver to remove the discrimination that was in favor of federal government bonds. So today you have the same tax benefits for subnational bonds, for state government bonds, as you have for corporate bonds, as you have for federal government bonds. So we believe that some of these reforms will certainly improve the participation of investors in bonds, but also the issuance in bonds.
I think I'm basically impressed with the fact that, like you said, an unlisted company can actually raise money from the capital market. You don't have to be listed on the stock exchange to have access to long-term funding. But you mentioned state government bonds, and I want to quickly just address that, because if you read the press, a lot of these state governments have been going to the market, to raise money from the bond market. But people have also questioned the fact that should we encourage this? You hear arguments about, they are mortgaging, their future, the state government. Wouldn't they be reckless with this funding and things like that? State governments raising money from the bond market, is it healthy? Should it be encouraged? Are there things the Securities and Exchange Commission is doing to make sure that this money they are raising is actually being used for what they set out to use this money for?
I think you've raised some valid concerns, but your question, is it healthy that state governments come to the bond markets? Absolutely.
Okay.
The reason is we all know that there are huge needs in terms of financing. All of the infrastructure, whether it be roads, rail, ports, power, there is no way whether the federal government or the state government can finance these things
strictly from their budget.
From the budget. So it is important that the capital markets offer them the opportunity to raise funds. In fact, Lagos state government has been a pioneer in leveraging the bond market, and whether it be infrastructure, whether it be the Soraya market, it's used the funding to basically help in industrial development and infrastructure development in Lagos State. Why is it important? It is not just important because of raising money. We believe at SEC that it helps entrench our democracy. How does it help entrench our democracy? The process of raising money from the capital markets is very rigorous. First, as a state government, you have to have your books in order. Second, there are third parties like reporting accountants, external auditors, credit rating agencies that do an assessment of your state. That assessment,
you have to open up your books.
You open up your books, absolutely. It's not just about your finances. It's about your governance. It's about the how you will apply the proceeds. It's about some of the things that you're doing in the future that will generate income, such that we can be assured that these bonds are going to be used for things that are credible. One of the other things which is particularly unique about Nigeria, which you don't have in other environments, is that we as SEC, after a transaction has been concluded, we monitor the use of proceeds in two ways. First, both the state government and the issuing house make returns
to the
SEC on a periodic basis. In some cases monthly, in some cases quarterly.
In terms of how they are utilizing the
resources. Second, we have introduced inspections of the use of proceeds. So a team of SEC staff, along with experts in the areas that are being invested in. So if a road is being built, we'll get an engineer who will accompany us to go and see that these funds are actually being used for what was reported in the prospectus as further protection to investors. So it is absolutely essential, but monitoring is key, because it is important that these funds are used properly.
For the purposes.
But most importantly, the process and the rigor that state governments have to go through to be able to raise these funds means that there's greater scrutiny, there's greater accountability, and therefore there's greater transparency. And in my view, it obviously
that's positive. Yes, I agree with you, DG. On this program, we normally take a musical break, and the way we do that is ask our guests to request for a song that she will enjoy. So what kind of song would you request on a Saturday afternoon like this?
Wow. There are a lot of songs I like. I like a lot of Nigerian artists. I still have euphoria from the Super Eagles winning the African Cup of Nations. So maybe Waka Waka, Shakira. As you may recall, there was a theme song for the World Cup
in South Africa.
And for me, that represented basically promoting what is excellent about Africa, because South Africa did a great job hosting. But I think it's also allows us to thank the Super Eagles for the great job they did for the Africa Cup of Nations. But the reward for hard work is more work. Because I'm really rooting for them to win the World Cup in 2014 in Brazil. And Shakira is a Latin American. So I think Waka Waka is the right song.
So this is a good omen, right? Beautiful song. One of my favorites, Waka Waka by Shakira. We'll be right back. This is Business Hour with Martin Udogie.
The This is Africa. Samina, mina, waka, waka, Samina, mina, sakarewa. This time for Africa.
Good afternoon, listeners. You're welcome back to Business Hour. And my guest this afternoon has been and still is the Director General of the Securities and Exchange Commission, Arunma Oteh. She's also the chair of AMEC, the African and Middle East Committee of Stock Market Regulators. DG, I want to focus on the Nigerian equities market, which is the stock market. Prices have been down. The market collapsed at some point. People lost plenty of money, and many still have not recovered. I'm sure there are so many of them who are listening to you now who is at the apex of stock market, regulation. But what I find interesting is that some markets have rebounded. The US market is back to pre-high levels. It's not even more than that. But ours is still less, or at levels that are pre-high levels. What will it take for our market to rebound to where it was before? And most importantly, DG, if you can also cover the lessons that we have learned from all this.
I would say on the contrary, our equity markets are amongst the top performing in the world. As you may know, the All Share Index rose in 2012 by 35.45%.
Okay.
And since this year, it has risen by almost 20%.
Okay. Year to date.
Year to date. Okay. Yes. So
we're talking this is February.
So absolutely.
Okay.
Less than 2 months.
Okay. Yeah. Okay.
The market has risen by 19.7%.
Interesting.
In less than 2 months.
Okay.
So there's no doubt that our markets are doing very, very well.
Trending upward.
Yes, and this time it's based on fundamentals. As you know, prior to the unprecedented decline in the stock market in 2008, 2009, there was a lot of euphoria. People were not very certain as to what they were investing in. There were market abuses.
Okay.
In our markets.
Okay.
There was share price manipulation. There were other forms of abuses. And since 2010, when we started the reform program on the Nigerian capital markets, one of the things we've anchored it on is that as SEC, we have zero tolerance for market infractions. Okay. And it's not just we're walking the talk. We're not just saying it. You will see that our enforcement machinery is much tougher, because that is what sends a signal as to the integrity of a market. The foundation of any market that will do well is integrity.
Okay.
Not even us Nigerians will say, oh, we love our country, and we'll put our money in something if somebody knows that they will be defrauded. So the foundation is that we must create an environment where investors are confident that no one will defraud them of their money.
Okay.
And then they will make a return. And this is a country that offers opportunities for huge returns to be made. The reason is the size of our population.
Okay.
The reason is the many things that need to be done. We have a population of 167 million people with rising incomes, with an economy that's been growing. It's considered one of the fastest growing economies in the world.
Okay.
With sectors of the economy that we hadn't been paying attention to before, like agriculture, that we're paying attention today. Agriculture makes up 42% of GDP, 70% of employment, and the opportunity for us to build strong agro businesses that could potentially be listed on the Nigerian Stock Exchange is enormous. The opportunity for us to have farmers, whether they're young people or older people, broaden access to the economy for Nigerians is enormous.
Okay.
And what the capital market does is provide funding for that. So the opportunity and the potential of Nigeria and the stock market and the capital markets in general is enormous. So what we're seeing is really a market.
We're saying that the more you do this reform, the more people will be attracted.
Oh, absolutely.
Both companies and investors.
Absolutely.
Okay.
In fact, what you may be aware of is that over the last few years, the international investors have taken the lead in investing in our markets.
That's true.
So at the beginning of last year, we had participation from international investors, where international investors comprised 80% of the daily value of investments in our market. Today, it has come down to 56%, which means that where domestic investors are recognizing the reforms that we've been implementing and are returning, and the benefits that the markets have to offer, and are returning to the market. So we're seeing the pension funds investing more. We're seeing retail investors coming back to the market because they recognize, looking over the last 3 years, that we're serious, that these reforms are focused on making sure that our market has the highest levels of integrity. And these reforms include ensuring that we have a stronger disclosure regime. So companies are required to provide information on what is happening on their companies timely and accurately. And you must have followed some of the delistings on the Nigerian Stock Exchange for companies that have not been complying with some of our requirements.
Okay, so I think it's very clear from your explanation, DG, that a lot is happening. So people will be having a lot more confidence in the market, and hopefully that should bring more people back into the market. But I just, now that we're on this issue about the Nigerian stock market, I want to quickly bring the issue about the government debt write-off. The 22 billion. What is called forbearance. Okay, I want to ask you, as the DG of the Securities and Exchange Commission, what is the significance of this? Because people have different interpretation of this whole debt write-off. Personally, I saw it as a strictly book entry transaction, no cash involved, and to me, cash is king. So I just glossed over it, and I also have a sense that even the stock brokers who were supposed to be beneficiaries of this so-called forbearance, I don't see them particularly excited about the 22 billion. So I want to use this opportunity of this interview. I want you to explain to Nigerians this whole 22 billion naira is all about.
But all of what you said is correct. There hasn't been any cash outlay to stockbrokers. I think it's important to start with the context. During the period of euphoria leading up to 2008, there were a lot of funds that were borrowed to invest in the market.
Is that what we call margin loans?
In this particular case, margin lending. So a number of brokers, like others, borrowed funds to invest in the market. Those funds, the borrowings were collateralized by their participation in equities. When the market declined after 2008, after the peak in 2008, they lost all of their contribution as stockbrokers to equities, and were no longer in a position to continue to finance these loans they had gotten from banks. When the Asset Management Company of Nigeria was set up, AMCON, in 2010, the role of AMCON was to take over non-performing loans from the banks, including these loans that had been made on the basis of margin to some stockbrokers. AMCON bought these loans at the going market price at that point in time, which was not the same level at which they were made. So the 22 billion is actually the difference in terms of market price and the price at which AMCON bought it. This program is a win-win program because AMCON has been very clear that it believes in the Nigerian stock market and will hold on to these equities for a period of time. And we've already seen the gains in the market. As I said, a little over 20% for the first 2 months of the year.
That's true.
35.5% all of last year. Why this support to brokers? Brokers are the backbone of the recovery of any market, because they're the ones, they're the ones who will provide you. If you want to sell, you go to them to help you sell. If you want to buy, you go to them to help you buy. So to enable them focus on building their core business, on helping the recovery happen, this was a necessary initiative, and the federal government has to be commended for that initiative. But as I said, the asset,
so as long as this debt was hanging over them,
they would not be able to focus on their core business. But at the same time, the Asset Management Company of Nigeria understands that when you look at the equities in Nigeria and compare them to equities in other parts of the world, that these are reasonably priced. So the potential for their prices to rise and for them to be able to exit in the future is very, very high. So from my perspective, it's a win-win situation, triple win. A win for the markets, a win for the brokers, a win for the Asset Management Company of Nigeria. So kudos to the federal government for approving this forbearance.
Interesting. On that very long note of explanation from the Director General, Securities and Exchange Commission, would like to take a short musical break. Mana, on this break that we're going into,
yes.
I'm going to do something different. I'm going to dedicate a song to you because I must say I'm impressed by you coming to do this interview. When I mentioned to some of my friends that you'll be coming, and everybody was are you until I hear her voice because we all know, you know, things we're reading about the press, but I think it just showed courage for you coming here. So
this is such a great program, and
thank you very much.
I'm delighted to be on it, and I think it's great. I mean, radio is 75% of Nigerians listen to radio.
It's the most democratic media tool.
So it's an opportunity to share knowledge about the importance of saving and investing, about the importance of seeking ways to raise money for building businesses. So I'm delighted and honored to be here.
So the special song for the DG from me is a classic by R. Kelly, The Storm Is Over. Fantastic song. The lyrics are even more powerful. The Storm Is Over, R. Kelly. This is Business Hour with Martin Udogie.
Sunshine somewhere beyond the clouds. I feel heaven, heaven is over me. Come on and set me free. Whoa.
Yeah, welcome back from wherever you are listening to us. This is Business Hour with Martin Udogie. For those listening on radio and also online, RadioNigeriaOnline.com. And on this very special interview segment, I'm still with the Director General of the Securities and Exchange Commission, Arunma Oteh, and we are welcome back from our short musical break with R. Kelly. Very, very special song.
This has been absolutely memorable.
Thank you.
I like R. Kelly.
Okay.
Absolutely a lovely song. I wasn't familiar with that one.
Okay.
The other one I like is Happy People. And you know, we Nigerians are happy people.
We are.
I love R. Kelly. Thank you. It's absolutely outstanding.
Thank you, DG. Okay, we are gradually winding down. This is the final segment of this interview. I want to ask a broader question about the economy. I think sometimes Nigeria presents some kind of contrast to people. What I've noticed is, like South Africans, when they come, like the MD of ShopRite, when he visited Nigeria, you know, he was saying that even if you say 60 to 70% of Nigerians are poor, that the balance, about 30%, is still bigger than South Africa, and that he saw a market for up to 700 ShopRite outlets in Nigeria. And then you look at what the telecoms are doing in terms of the numbers they are generating. So this is a huge country, but some people also see that the bulk of Nigerians are poor or living below poverty, and therefore, you know, people begin to wonder, can you really have a thriving stock market in an economy like this where the vast majority of Nigerians are just struggling to make ends meet? And I know people also say that the stock market, you know, has been described as one of the best wealth creation machinery. So as somebody who has been at the peaks of the system, the capital market, how can you convince Nigerians to really believe in the stock market machinery?
But first of all, we already have a thriving stock market. I think what we need to do is make sure that the stock market continues to be built so that it's world class, so that it helps us realize our potential as a nation. I think this is a land of milk and honey. The opportunities in Nigeria abound, and what the capital market provides is an opportunity for Nigerians to participate in these opportunities that are being built either by indigenous companies or by people from outside of Nigeria. And you know, when you look at the Asian tigers, I mean, when you look around the world, I mean, when you look at even the history of the United States, no nation has developed without domestic savings that are channeled to investing in that nation. So first and foremost, we as Nigerians have to be a part of developing Nigeria. Secondly, it is not for charity. The principle of raising your standard of living is that you earn some money on a monthly basis or on a weekly basis or on an annual basis. But you set aside a portion of your income. You save it for the rainy day. You save it for investing in your future. You save it so that you can go and get a master's if you have a university degree.
Okay.
You save it so that
kids
for your children's education.
Okay.
You save it so that
For
if
retirement.
in the future you have a health issue,
Okay.
you're able to deal with it. You save for your retirement. What you want to do is make sure that those investments are being managed.
So that portion
by
you said,
professionals,
yes, exactly.
that are being managed by professionals.
Okay.
And this is why since 2010,
Yes.
as SEC, we've been encouraging collective investment schemes to be set up in Nigeria. And collective investment schemes are basically an opportunity for you to leverage financial experts that have been registered by the SEC. I'm not talking about wonder banks or manas. I'm talking about
Professionals.
legally registered fund managers. If you go to our website,
Yes.
from time to time we publish in newspapers those who are registered with us.
Okay.
If you register with them, you can put 1,000 naira, you can put 10,000 naira, and you don't just invest in one bank. You can invest in several banks. You can even invest in what you call a balance fund, which gives you an opportunity to invest in equities, to invest in bonds. You can invest in real estate investment trusts, which allow you to participate in some of what we're seeing develop in the property market.
Okay.
So it gives you an opportunity to diversify your risk, to take advantage of some of the opportunities that we're seeing in Nigeria.
Absolutely.
And so we must learn from the Asians. I mean, the Asians have a
Absolutely.
culture of saving.
Oh yes, high savings. Yes.
They have a culture of investing. And they will put money away first before they buy a toy or they buy a car. They will buy a house first before they buy a car.
Oh, so that is what's also driving their economy. I mean, we're all
Absolutely.
fascinated about what is happening in Asia. So
Absolutely. Although some
One
people
major
say that
driver.
they need to spend some of their money like we do, so I think they need to learn something from us,
Okay,
and we
as
need
well.
to learn
Absolutely.
something from them.
Okay.
But clearly, what will drive Nigeria is if we individually save, if as a nation those savings are mobilized and are used for building our country. And I think the federal government has set an example. The creation of the Sovereign Wealth Fund,
okay.
which is a $1 billion fund that has been set aside to invest in infrastructure, to invest for future generations, and to stabilize our earnings,
Yes.
given that we're dependent on oil and gas. We've also, through the pension reform that was started in 2004, been able to accumulate more than 3 trillion naira, which is administered under the contributory pension system. I'm not talking about some of the challenges that we're facing with the police pension fund or with the army pension fund. I'm talking about the contributory pension system, which private sector and many public sector agencies have transitioned to, which is run like you run around the world on the basis of world-class practices. The opportunity for us to save is important, but we're also very entrepreneurial. We'll be able to have funding for small and medium scale enterprises, which are basically the
engine of growth, as you say.
the engine of growth and the creator of jobs.
Okay, Digi. As we are winding down very quickly, I wanted you to just quickly educate us on. We keep hearing this debate about certain strategic sectors that are not listed on the market. Telecoms is one of them. Upstream oil and gas is another. So my question is: should they be compelled to list, and why? Or is it that we haven't made a sufficient business case for this people to list? Briefly.
It makes great business sense to list. There's no doubt about it. And the examples I've given in the past are that if these companies, whether telecom companies, Glo or Etisalat and the others, or the oil and gas companies are listed, some of those stories we hear about a base station being blown up or a pipeline being vandalized. I mean, think about it, Martin. If you had a piece of Glo or a piece of MTN and somebody told you that a base station around your neighborhood is about to be blown up, you will do whatever is necessary because you have a stake in that company.
Okay.
Beyond that, it helps their brands. They're already very well-known brands. But think about Honeywell. Think about the Dangote, a group of companies. What they've done in the last 10 years by being listed on the Nigerian Stock Exchange. They've been able to identify other sources of funding, whether it be from multilateral agencies. The Dangote group of companies has been able to identify opportunities to invest in other parts of the world and grow their businesses. All of this is being created by what happens to your brand if you're listed. So whether it's more empathy for you, democratizing your success, whether it's being able to raise money from other sources. That is what listing provides you. A number of companies like MTN are already providing scholarships and doing other corporate social responsibility issues.
Yes.
There is clearly an opportunity for them to allow Nigerians to participate in the success they've made over the last 10 years.
So it's a win-win-win-win for everybody. DG, I want to ask a slightly more personal question as we close. I know you're first-class graduate in computer science. Nsukka went to the Harvard Business School and did a lot. But I just think that many Nigerians probably do not really know you personally, in terms of your pedigree. So can you, in the next 1 minute, tell Nigerians what you've done prior to SEC, DG, Securities and Exchange Commission?
A lot of things, but over the last 28 years, primarily in the capital markets, after university at UNN, University of Nigeria in Nsukka, I joined a youth corps in University of Benin, where I actually taught computer science classes. I joined Centerpoint, which, as many people know, is a veteran stockbroking firm. I left Centerpoint in 1987, moved abroad, worked in consulting, went to the Harvard Business School for my master's in business administration, worked for Harvard in development, and joined the African Development Bank, where I've held a variety of positions.
Okay.
I've covered as a financial analyst, which is a critical skill in the capital markets. I've covered companies and countries in West and North Africa. I then joined Treasury, and Treasury, as you know, for multilateral agencies, is raising money in the capital market and investing money in the capital market. I ran a funding program in Asia, in America, in Europe, in Africa. So I've raised money in all kinds of currencies using different kinds of instruments.
Okay.
I've dealt in derivatives. I've also managed funds. I've, up until before I started taking on leadership role,
yes,
I managed portfolios of up to $10 billion in several currencies. I was involved in the pension fund of the African Development Bank.
Okay.
So whether it's investing, whether it is raising money,
yes,
whether it is doing due diligence, I've been involved in that. I've advised ministries of finance, central banks, securities commissions across Africa on issues that we're dealing with today.
Okay.
In Nigeria.
Interesting.
So I've done a variety of things. I don't know if your 1 minute is enough for me to talk about.
I think you can go on and on, but we are winding down.
But it is a 28-year career.
Yes.
In the
sterling career, by the way, I must say.
Yeah,
okay, DG, we have what we call a trivia segment where we ask some simple questions. Are you ready for that?
I'll try.
You try. Okay.
I'll try.
Okay. Now, assuming a younger sister or relation is going for an interview, in fact, it's coming for an interview where you're on the panel, and she comes to you for tips. Okay, I'm going to ask you, what will you advise her if she's trying to choose between wearing a skirt suit or a trouser suit? Which one will you advise her to wear for an interview, this all important interview?
It's a trivial question. I'll advise her to wear the one that she's most comfortable in, but to make sure that she's properly covered.
Okay.
Whether it's a skirt suit or a trouser suit.
Okay.
Yes.
How about the color? She's confused about that. Should she go for the blue, the black, or the grey color?
I love black.
Okay.
So I would advise her to wear black. On Wall Street, the color is blue.
Okay.
But I think everybody's gravitating towards black. But I love black, so I'd advise her to wear black.
Okay. Now she's also struggling with how her hair should be. Should it be braided or should it be weave on?
I think she should wear what she looks good in. In our culture in Nigeria, people appreciate braided hair. They appreciate a weave on. So what I want her to do is to look professional.
Okay.
To look very confident. And what makes you look professional and look confident is, first of all, doing what you're comfortable in. Don't be somebody else, because if you're somebody else when you're going to an interview, you will be uncomfortable.
Okay, so looking professional and confident and comfortable.
Yes.
On the makeup, should it be light makeup or no makeup?
I think either one is fine. The light makeup or no makeup is fine. She should just be herself. So if she's used to wearing light makeup, she should wear light makeup. Okay. If she's used to wearing no makeup, she should wear no makeup. She should be herself.
All right. So on that note, we come to the end of this very, very fascinating.
But you didn't give me a mark for the trivial questions. I thought you'd give me a mark.
DG, we'll let Nigerians judge you on that. It's been very fascinating interview. Thank you very much.
It's been very enjoyable. Thank you, and great work, and keep up the good work. I think it's very important that we bring business issues to the Nigerian public, and I believe your forum is an absolutely excellent way to bring business issues to Nigerians.